Welcome back to Iraqi Dinar News, your ultimate destination for real-time updates on global currencies, Forex movements, and economic events that could impact your investments. Today, we have a jaw-dropping story that is shaking markets worldwide and leaving traders completely stunned. Yes, you heard that right. An unexpected currency surge has just taken place, and it's making waves across the Forex world. In particular, the Vietnamese dong, a currency many have considered stable but tightly managed for years, has just skyrocketed past all expectations. This is not a small fluctuation or a routine technical bounce. No, what we're seeing is an explosive, almost unprecedented movement that has caused serious ripples among traders, investors, and financial institutions. Whether you're a seasoned investor, a dinar enthusiast, or simply someone watching global currency trends, today's news demands your full attention. In this report, we're going to break down everything you need to know. What triggered this surge, why it's happening now, and what it could mean for emerging markets, including potential correlations with currencies like the Iraqi dinar. To begin, the Vietnamese dong surge came seemingly out of nowhere, shocking traders across Asia and beyond. Early reports indicate that this spike occurred during the Asian trading session, a period typically marked by lower liquidity. That timing only intensified the effect of the movement, making the dong appear to jump overnight. Analysts are calling it a statement move, something that shows more than just a technical correction. It's the kind of shift that makes experienced Forex traders pause, recheck charts, and rethink positions. For months, speculation has been building quietly about Vietnam's economic potential, but nobody expected this level of dramatic movement. The value increase was double-digit in percentage terms, a scale rarely seen in modern currency markets. Especially for a nation that has long maintained a tightly managed exchange rate, this surge is forcing traders and institutions alike to re-evaluate their positions, consider the long-term implications, and wonder whether undervalued currencies could follow in the dong's footsteps. So, what factors are contributing to this sudden spike in the Vietnamese dong? Economists point to a combination of strong fundamentals and strategic economic shifts. In Vietnam over recent years, the country has been steadily moving away from low-wage manufacturing exports, such as textiles, toward high-tech industries and services. International corporations, including giants like Apple, Samsung, and Intel, have increasingly shifted production and operations to Vietnam, taking advantage of its skilled workforce and stable infrastructure. This move is part of a broader global trend of supply chain diversification, where companies seek alternatives to China due to geopolitical tensions and trade uncertainties. As a result, Vietnam has seen a massive boost in foreign direct investment, which is creating a strong demand for the dong, driving it higher against other major currencies. The combination of these economic fundamentals and strategic industrial shifts has laid the groundwork for today's historic market movement. Another critical factor contributing to the dong's surge is Vietnam's monetary policy and foreign reserve management. The State Bank of Vietnam has reportedly been quietly accumulating foreign currency reserves over the past months while keeping domestic inflation stable. This has bolstered investor confidence, as it signals that Vietnam's central bank is prepared to maintain stability and liquidity in the currency markets. When combined with this sudden influx of speculative capital, this strategic approach created a perfect storm for the dong's explosive rise. Hedge funds and high net worth investors, many of whom have been monitoring undervalued currencies in the region for months, reportedly began entering the Vietnamese market aggressively. What had once been considered a low volatility, stable currency suddenly became a hot investment target, pushing the dong into territory few traders had imagined possible just weeks ago. Speculation surrounding a potential upcoming currency basket recalibration is another reason behind this surge. Financial insiders have suggested that global institutions may be considering adjustments to emerging market currencies, including the dong. While official confirmations are absent, whispers of partial flotation or revaluation for Vietnam's currency appear to have ignited investor interest. As soon as this news or possible leak circulated in financial networks, traders reacted instantly, piling into the dong across Forex platforms. The result was a dramatic overnight jump against multiple major currencies, including the US dollar and the euro. This development is particularly intriguing because it highlights the power of global institutional signals in shaping currency behavior. Even before formal announcements are made, the combination of real economic strength and speculative positioning created a scenario that few could have predicted. But everyone is now watching closely. The market reaction has been extraordinary. Brokers are reporting unprecedented demand for Vietnamese dong trading pairs, while trading platforms are adjusting spreads to manage volatility. For many investors who have been holding the dong patiently, similar to those holding the Iraqi dinar, the surge represents a real, tangible moment where patience may finally be paying off. In Vietnam, authorities have released a carefully worded statement urging calm, emphasizing stability, and reaffirming their commitment to a controlled exchange rate. They have neither confirmed nor denied the speculated currency recalibration, a deliberate approach to prevent panic or speculative overheating. Even so, global traders are adjusting strategies, analysts are rewriting forecasts, and currencies across the region are being evaluated in light of Vietnam's sudden move. The ripple effect is immediate, global, and potentially long-lasting. Looking beyond Vietnam, this surge is already impacting regional markets. Neighboring countries such as Laos, Cambodia, and Thailand are closely monitoring the situation. Investors and central banks alike are keen to see whether Vietnam will allow the dong to continue strengthening or intervene to stabilize the currency. Such attention is natural as sudden currency surges can create pressures in regional trade balances and investment flows. Southeast Asia has historically been a hotspot for rapid economic growth, but tightly managed currencies often serve as a stabilizing factor. A dramatic change in one country's currency can, therefore, have ripple effects that extend far beyond its borders. Traders, governments, and multinational corporations are all reassessing risk exposure, and this attention is amplifying the dong's movement in real-time trading. For investors holding the Iraqi dinar, there is naturally curiosity about potential correlations. Could Vietnam's surge indicate a broader trend where undervalued, tightly controlled currencies begin to revalue globally? While it's too early to draw direct connections, the dong's movement provides a compelling example of what can happen when strong fundamentals meet strategic economic reforms and speculative interest. Communities focused on currency investment are watching closely, analyzing patterns, and comparing them to other emerging market currencies. The sudden rise of the dong has reignited hope for investors who have been patiently awaiting similar breakthroughs in undervalued currencies. Whether or not the dinar follows a similar trajectory remains uncertain, but the dong example certainly encourages renewed attention. Global financial institutions are scrambling to respond. Major banks, including well-known international players, have released early statements highlighting the unexpected dong surge and revising currency forecasts. Analysts are examining trade flows, capital movements, and macroeconomic signals in real time. As this spike challenges assumptions that have held for years, the market is moving faster than many models had anticipated, showing the real-world consequences of speculation meeting strong economic fundamentals. Even for long-term investors who do not actively trade currencies, today's events highlight the importance of staying informed and understanding the global financial landscape. Missed signals can translate into missed opportunities, especially when currencies experience sudden, dramatic movements. It's also worth noting the impact on commodities and related markets. Vietnam's economy is heavily linked to high-tech manufacturing, electronics, and rare earth metals. The surge in the dong has coincided with spikes in commodities tied to these sectors, creating further market shifts. Supply chains, investment flows, and trade pricing are all influenced by sudden currency appreciation, and companies with exposure to Vietnam are recalculating budgets, sourcing strategies, and pricing structures. Even cryptocurrency markets felt the ripple effects, as speculative capital temporarily flowed away from digital assets like Bitcoin and toward the VND. highlighting how closely intertwined global financial instruments can be in periods of extreme movement. For everyday traders and viewers on our channel, this is a moment that demands attention but also caution. Sudden surges can present opportunities, but they also carry significant risks. Timing, research, and an understanding of broader macroeconomic trends are essential. History shows that markets often overreact initially before stabilizing, and the same could happen with the dong. While it's tempting to jump into the trend immediately, disciplined analysis and a cautious approach remain critical. What makes today unique is the combination of long-term economic strength and short-term speculative excitement, something rare in modern currency markets and worthy of careful observation. Let's take a deeper look at the economic fundamentals behind the dong's rise. Vietnam has consistently posted impressive GDP growth rates, maintained manageable inflation, and expanded its export base across high-value sectors. Infrastructure investments, reforms in financial institutions, and a focus on innovation have made the economy more resilient to shocks. The state bank's management of reserves and foreign inflows has further strengthened confidence in the dong. This careful economic planning created the foundation for the surge we are witnessing today, demonstrating that sudden market movements often have deep, underlying reasons rather than being purely speculative or arbitrary. Speculation played a key role in amplifying the surge. Traders observing trends in other undervalued currencies, such as the Iraqi dinar or certain Middle Eastern currencies, began redirecting capital into the dong. This influx of speculative money accelerated the appreciation and drew even more attention from institutional investors. When rumors of possible partial currency flotation emerged, it triggered a chain reaction. Forex platforms adjusted spreads, brokers responded to surging demand, and global attention turned to Vietnam. This feedback loop demonstrates how sentiment, speculation, and actual economic data combine to produce market shocks, often leaving casual observers amazed at the speed and scale of change. One particularly interesting aspect of today's surge is its timing. It occurred during low-volume trading hours in the Asian session, which magnified the movement. In Forex markets, timing can amplify price swings, especially when liquidity is thin. This unusual timing caused dramatic overnight gains, catching even experienced traders off guard. It also underscores the importance of monitoring currency markets continuously, as major movements can happen outside of traditional trading hours. Those paying close attention could have positioned themselves advantageously, while others may have been surprised by sudden, intense volatility. From a broader perspective, this event signals a shift in global sentiment toward controlled currencies. Historically, tightly managed exchange rates have been considered stable but limited in growth potential. Vietnam's dong surge challenges that notion, showing that careful economic management, strategic investment, and favorable geopolitical conditions can produce remarkable outcomes. Investors worldwide are now reconsidering the potential of currencies previously deemed stable but undervalued, weighing risks and rewards in ways not considered before. This could have long-term implications for regional and global currency markets, as similar economies may see increased capital flows in response to Vietnam's success. Looking ahead, the question is whether this surge represents a temporary anomaly or the start of a longer-term trend. Analysts are divided. Some believe this is a one-off spike driven by speculation and leaked signals regarding potential currency adjustments. Others argue that Vietnam's strong fundamentals, combined with global capital flows and strategic positioning in high-tech manufacturing, suggest a sustained upward trajectory. Investors and currency watchers are closely monitoring subsequent trading sessions, central bank statements, and geopolitical developments to gauge whether the dong will stabilize at higher levels or retreat after initial excitement. It's important to highlight how this affects ordinary investors. Even if you are not actively trading currencies, events like this impact a global investment portfolio's commodity prices and trade flows. A sudden surge in one currency can everything from import-export costs to corporate earnings in related sectors. For those holding the Iraqi dinar, it offers a moment to reflect on similar opportunities in undervalued currencies. While the situations are not identical, the dong serves as a case study in how disciplined economic planning and strategic market positioning can lead to significant valuation adjustments, even after years of stability. The role of central banks cannot be overstated. Vietnam's authorities have carefully managed expectations, emphasizing stability while remaining open to potential adjustments. This measured approach contrasts with reactive interventions seen in other markets, demonstrating a sophisticated understanding of global finance. Meanwhile, other regional central banks are closely observing the dong's performance, evaluating potential impacts on their own currencies. Decisions made in Hanoi could influence monetary policies across Southeast Asia, making this a developing story with implications that go far beyond Vietnam's borders. For Forex traders, this is a moment to recalibrate strategies. Volatility is high, spreads are shifting, and market sentiment is fluid. Staying informed is critical. Charts, news updates, and reliable signals will guide trading decisions in this environment. The dong surge also emphasizes the need for risk management, as dramatic movements can produce both opportunities and losses in rapid succession. By monitoring trends, reacting thoughtfully, and analyzing both fundamentals and speculative flows, traders can position themselves to benefit from the unfolding scenario without succumbing to panic or hype. In conclusion, today's Vietnamese surge represents a historic event in currency markets. It is the result of strong economic fundamentals, strategic foreign investment, careful monetary policy, and speculative momentum converging to produce a dramatic overnight movement. Traders are stunned, brokers are adjusting, and investors worldwide are reevaluating opportunities. Whether this is a temporary spike or the start of a longer trend, the event demonstrates the dynamic nature of global finance and the potential for undervalued currencies to make headlines when conditions align. Those who pay attention and remain agile are best positioned to navigate the new landscape. As always, Iraqi Dinar News will continue to provide you with timely updates and in-depth analysis as the situation evolves. If you hold the Vietnamese dong, the Iraqi dinar, or are simply interested in emerging currency trends, now is the time to stay informed and vigilant. Don't get swept up in hype, but do pay attention to how global sentiment, policy decisions, and economic fundamentals interact to create sudden opportunities. Make sure to like this video, subscribe for the latest updates, and leave your thoughts in the comments below. Do you think the dong surge is a one-off event, or is it signaling a broader wave undervalued currency revaluations? We'll continue to cover every development as it unfolds. Stay sharp, stay prepared, and stay tuned for more breaking Forex news.